Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the US Consumer Price Index reached 9.1% in June from a year before. It's the highest rate in nearly 41 years, while the annual rate came in at 1.3%. The so-called core inflation, however, which excludes food and energy items, also rose strongly, which was up by 5.9% over the year. Investors are now betting that the US Federal Reserve will deliver another 75 base point rate hike at their up-and-coming meeting on the 26th, 27th of July, and is likely to see a 50 base point rate hike in September. After the announcement, the US dollar, which measures the greenback strength against a basket of 6 major currencies, refreshed its highs of 2002 or 20 years ago, around 108.38 before dropping back to 107.80. All eyes today will be on the Australian job report, which shows the change in the number of people employed in June. The forecast indicates a drop from the previous 60,000 to 30,000 in employment and a decline from 3.9 to 3.8 in the unemployment rate. Having taken many bearish hits, the Australian dollar did stage a significant rebound from the market, finding a base around 67.15, rallied all the way up towards 68 cents, but struggled to sustain. Ahead of the job numbers, no doubt we may see a little bit of a weaker price action. However, if we see any dips or any pullback continuing towards the level around 66, 60, 65, I anticipate the bulls will return and possibly see a rebound once again. Although we did clear 67.75 to confirm a further rise, the market is struggling, but I feel this is just brief and may actually stage a further test and look towards that 68.15 and therefore look beyond there to 69 cents. As I mentioned, the markets were a little bit whipsawed after the CPI number out of the US, but still the euro at this stage is respecting the level around 99.50.65. I do like the way this pattern is shaping up with bullish divergence and therefore could see further gains up towards 100.55 as minor and then 101.30.40 as a potential target and reassess from there. And dollar yen still pressing towards that top side resistance area around 137.65.70. As mentioned yesterday, is no doubt there is stops parked above this level, and if we see a break above 137.70, I do anticipate a further rise up towards the region of 139.15.35 before the overall turnaround or correction. Sterling still respecting the base, that is, round 118.15.30. Although there is a little bit of divergence coming into play here, the market should still maintain this support level. However, failing to hold above 118.15 would give further concerns to the bear case and look down towards 116.70. As I mentioned, while intact, we could see a rise back up towards 119.65 as a potential target and reassess from there. Sterling CAD, well, the market was a little bit whippy overnight after the Bank of Canada raised interest rates by 100 basis points to 2.5%. It caught the investors off guard as they were expecting 0.75 of a hike, but that failed to come through, hence why we got a whipsaw price action. In light of the pattern, there is still a little bit of divergence here, and therefore I'm not going to get too negative as we get closer towards the bottom side of the range, which is around 153.75. And if we do see a rebound in sterling, should display further strength in the CAD weakness and the sterling strength to push the market back up towards that 155 to 156 objective. Well, the market took a stab to the downside for gold. It briefly touched the region low of 1,705.06 before rebounding. Market doesn't like being down there, as we can see from previous attempts. One stage we saw on the monthlies, we got a very strong candle, which was a dragonfly doji. Along with that, we saw another rejection which saw a rally from 1,690 all the way back up to 1,900. So therefore, I would like to be a little bit cautious, close to a hammer here. That we may see a break to the upside, and if so, could see the clearance of 1,742 and on towards the region of 1,764 to 66. Still looking at the base though, around 1,686 to 91. Finishing up with oil, well, the market did rebound off the lows around 91, and therefore looking from the rebound may actually see a slight upstep today. I'm holding a neutral view still for another 24 hours, due to the fact is that there is little indication from the technicals to support a bullish case, and reaching my objective, which was recent overnight, that is of 92.2040. I'd rather sit out and be neutral just in the short term until we get a little bit more of a confirmation from the technicals to support a call. Well, that wraps it for the morning. Thank you very much for joining me. As always, a guy for the intraday report. I hope you enjoyed a great start to the day.